AMC stock is currently down about 3% today. As you know, GME earnings were not as good as what they could have been. GME canceled their earnings call and did a big shakeup on the corporate level, making Ryan Cohen the executive chairman while also firing the CEO, and they did miss on their EPS. You were expecting EPS of negative 12 cents per share. It actually came in at negative 14 cents per share, or negative 17 cents on a undiluted basis. So not the profitability that we were hoping to see like we seen last quarter around. And this is leading GME to be down about 18%. That is affecting AMC again about 3%. The big catalyst for AMC, although, is not GME earnings. It's going to be the court date. And it is currently June 8th. Next court date scheduled for June 29th. So pretty shortly here, are we going to get new information that could have a big impact on AMC stock. Now, what's actually interesting today is you are seeing the cost to borrow rates soaring today, over 300%. And they kind of started soaring a couple days ago from 60% on the cost to borrow max to over 300% now. Leading into GME earnings. But after this volatility catalyst, you would expect the cost of borrow fees to actually fall, and it doesn't look like that is actually happening today. So we have a lot to talk about. We're going to get into what is going on here today in the markets as well, because things are getting really weird out there. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Let's first start with that. What is happening out there in the markets today? Well, you really didn't get much as far as economic data or anything like that. You did get one piece of data that is affecting the markets today. And if we go ahead and look, it's the initial jobless claims. This actually came in the highest week since 2021. So it's been a while. And initial jobless claims came in at 261,000. You were expecting 235,000. So this showing maybe a little bit more weakness in the labor sector, although we've gotten these, hotter initial jobless claims on a, one-off week basis, and it really hasn't kind of turned into an overall weakness in the labor market. But when this did come out, bond yields did fall. That supports technology. That does support the overall notion of rate cuts at some point down the line, because if the labor market does, start to weaken by quite a bit, well, that's what the Fed would do, is to cut rates. So that is bullish for technology. And you could see, if we go ahead and look, the NASDAQ is up almost 1%, the S&P is up almost 0.5%, and the Russell 2000 down 0.72%. So what you seen yesterday was, finally, the average stock started to do well. If you take a look at these two lines, this line is the NASDAQ. NASDAQ's been going parabolic. Marko Kolanovic says, yeah, we're approaching a tech bubble, which is kind of crazy to see the head of global strategy for JP Morgan saying technology is in a bubble. But you really haven't seen the average stock actually rally as well. But what you seen yesterday is exactly that. The average stock went higher as technology actually went lower. So this was kind of starting to squeeze some of those shorts out of, their healthy positions, right? When their collateral values in some of these big tech names have continued to go higher, it doesn't put pressure on shorts. Well, we've seen the start of that yesterday, and now it's kind of reversing itself. So we really don't know which way this market's going to go. Is it right to be in big tech still? Is it right to be in small and mid cap companies? We just don't know. But I think it's pretty safe to say big tech will come down pretty shortly, and that will put more pressure on the hedge funds when that ultimately does happen. Now, as far as a broad market basis, next week you're going to have Fed Jerome Powell. That's going to be the biggest catalyst of next week. But the day before, actually on Tuesday this time, you're going to have the CPI report that does come out. And based off of what the CPI report says, that's what Fed Jerome Powell is going to do. That is going to make the ultimate decision on, do we get a pause or do we get a rate hike at this next upcoming meeting. Now, next Tuesday, you're expecting the headline inflation rate month over month to come in at 0.3%. Your last reading was 0.4%, so a deceleration. Core inflation rate year over year for May, you're expecting that at 5.4%. Last month was 5.5%. Again, a deceleration. Inflation rate year over year, the headline number you're expecting at 4.7%. Last month's reading was 4.9%, another deceleration. And the core inflation rate month over month, you're expecting that to come in. Consensus is at 0.4. Forecast is for 0.3. Last month's reading was 0.4. So kind of unchanged, I guess, for the core month over month that you're expecting next week, and then it's going to be Fed Jerome Powell the day after that. So if you want to position for some of these things, right now, really by Friday might be a good time to actually do so. If you think the markets, some of your big tech's going to actually come down, could be a good time to position for that. At the same time, it's hard to tell when the next catalyst is going to happen or come for AMC, but it's going to happen over the next couple of weeks. We know that for sure. And based off of where AMC is currently trading at, I mean, take a look at the charts. It's at $4.58. It's already priced in a lot of bad news. The bad news has been priced in to AMC stock. So I think that does give you somewhat of an opportunity here with some longer time frame calls, or just flat out buying the stock. I really don't think GME earnings changed anything. For AMC, it is giving you a 3% down day, but as I indicated, AMC had already fallen a lot, so I believe you would have gotten a bigger down day off of GME earnings if the stock had rallied into earnings like GME did. GME rallied into earnings, so it's down 18%. AMC, while it's not the same business, tends to be in the same category and tends to react similarly to the way GME does as well. Now, if you take a look at AMC on a more technical basis, really the key level that I have been waiting for and watching for is $4.38 per share. This is the previous low that you've seen on May 31st. Jeez. And then you have to go all the way back to April 5th of 2023 to get back down to that level. So it doesn't look like we're in full-blown capitulation. The stock's just cratering. It is a slight reset from the kind of bounce we've seen from the 438 level over the past week or so. You got all the way up to $4.76 per share as of yesterday, obviously giving some of that back here today. RSI still in depressed levels, sitting at 38.30. Oversold is 30, so you're at that kind of lower end range. And the MACD is actually quite bearish, but it is starting to curl up. This yellow line is starting to curl up, and that looks more bullish than not if the stock can kind of hold up from here and actually start to go higher. But with GME, things don't look nearly as good, I guess you could say. I mean, AMC doesn't necessarily look good, but based off their last earnings, there's quite a few implications. Number one, who's going to be the new CEO? And what does Ryan Cohen plan to do to turn around this business? Initially, when that news came out about the CEO being fired, Ryan Cohen kind of stepping in to fill somewhat of that void, the stock actually fell about 5% off of that news. So markets didn't really take that bullishly off of the initial reaction before the earnings numbers even came out. It just wasn't taken bullishly. So we'll see what kind of drag this does put on GME. GME overall is still higher than where it was a couple weeks ago, right? After earnings last time around, GME had hit a high of $27 per share last earnings, and subsequently fell to about $18 per share. You're at $21.44 per share, so things could be a lot worse here. Do they continue to trend down? Well, Probably not. The earnings were still pretty good on a year-over-year basis. They're improving. The business is getting better, but it just wasn't quite profitability that we were hoping to see. Now, if we take a look at some of the data here behind AMC stock, the live short interest of free float, sitting at 21.94%, 113.31 million shares that are currently sold short. Cost of our average 109%, cost of our max at 306%, and cost of our minimum sitting at 50%. Interactive Brokers has 1,000 shares currently available to be lent out with a cost of our fee of 64.3%. So numbers over here, actually insane. The cost of our fee spiking again is telling you something, right? It's telling you volatility is here, because as a lender of stock, imagine you are lending me shares of AMC. Just imagine for me. You're lending me stock of AMC. Well, if you knew that there could be a short squeeze around the corner and theoretically the stock could rally 1,000% over the next couple of weeks, well, if you have that kind of mindset, what kind of cost to borrow fee do you want? Like, what would be appropriate to you based off the expected move that you expect for AMC to go through? 100%, 200%, 300%, 500%? Who knows? That's where these cost to borrow rates actually get calculated, as well as supply and demand, right? If there's 10 other people that are brokers, right? I got 10 buddies that are brokers, and only one of us has shares of AMC. Well, it's hard to get your hands on. You have to come to me. I will set the price more or less, and that's kind of why you're seeing the cost to borrow fees across the board today actually spiking by quite a bit. Yesterday's cost to borrow fee was 269%. And again, at one point earlier in the day yesterday, the cost to borrow fee was 135%. You would have expected, after a catalyst like GME Earnings, kind of the cost to borrow fees to start to go down. You should have seen cost to borrow fees actually fall off a cliff here today, and it's quite the opposite. So I think that does set us up for a lot of volatility. At the same time, AMC stock looks more squeezable than ever with a short score of 93, $533 million worth of short positions currently on AMC stock. Let's go ahead and go back to this. Free flow out on loan at 36%. 186 million shares out on loan. Days to cover sitting at 7.86, which is the highest level that you have seen in a very long time. This is higher than you have been at in the last 12 months, and I believe higher than you have seen in the last 18 months as well. So volume has been lower, and once that volume does come into the stock, that's when you're actually going to see the rally kind of materialize for AMC stock. Again, big catalyst is going to be the court date. Who knows when we're going to get news? I think we're going to get news of that beforehand. I don't think we're just not going to hear anything until June 29th. I expect the next couple of weeks to get some news around that, and that's what's really going to affect the stock. Now, if you look at the Ortex data as well, the option activity is certainly out there. You could see a lot of bearish option activity again here today, trying to suppress the stock. Not as many large orders, but they are targeting, again, those in the money puts with AMC stock, trying to get market makers to go short on this name. And we know short interest is about 35% on AMC stock when you factor in the market maker shorts that they currently have on AMC, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.